Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how you going? Welcome to the podcast today, recording a wet and windy Sydney Wednesday afternoon. It's pretty miserable out there, and I know it's school holidays on right now, so there's going to be a lot of kids a bit twitchy, I think, wanting to get outside and get out and have a bit of a run around, a bit of fun, but this is the way it is, and we're recording this as what looks like we're going to enter a second phase of restrictions here in New South Wales. We all know that Victoria is very much that way as well, so locked up at the moment. Let's fingers crossed that we can push through this and try and abate this most recent spike in COVID infections, community transmissions, which is the big problem that they tried to flatten out. But here we are. We thought we'd sort of got through the worst of it, but it looks like this is a long way from being over. So keep safe, keep vigilant to all our healthcare workers. Keep up that great work that you're doing out there. Those on the front line doing all the testing, and there's thousands of tests happening every day. It is appreciated, it is acknowledged, and you guys are the backbone of helping us get through COVID-19. And, you know, we've had some investor stories here, people that have been completely impacted by COVID. Most recently, an investor that got stuck out in South America when COVID hit. And if you haven't listened to that podcast, go and do it. We like telling investor stories, and they're the more colourful ones, and it's been a very popular one. So go and check it out wherever you listen to this podcast, and you can tune into all those different investor stories. Today's going to be no different. We have an investor in the studio who invests in property, also a real estate agent, but I won't hold that against him, Alex Lumsden. Alex, how you going? You well?
Yeah, good, Paul. Thanks, mate. Thanks for having me.
Are you investor first, real estate agent second, or real estate agent first, property investor second?
You said you weren't going to hold it against me.
No.
I would call myself an agent first. It's what I do every day.
Yeah.
But obviously investing is a bit of a hobby and a bit of a pastime. That's certainly what I did before I became an agent. That's how I got interested in property, and then I moved into doing it for a job. But definitely not... real estate agent definitely isn't what I introduced myself at parties. It tends to make the...
If I met you at a party and imagined, I know a lot of agents, and a lot of them are at parties because that's where they do all their networking, turning in tomorrow's listings. But if I met you at a party and what do you do? What would you say? I make dreams realities for people. Would that be the...
That brings up other images in my mind. But no, mate, I would say I work in real estate. I work in real estate. I work in property. Yeah, and then I would say, you know, I have a business and all that sort of stuff.
Yeah, that's cool. That's good. So Lumsden Agency, where are you based, Alex? Where's your office?
Office is in Barangaroo, here in Sydney, obviously in the city. And yeah, we play around sort of the inner west and the east, and sort of in that little inner city ring.
Yeah, and we're towards the back end of the podcast, mate. I'll pick your brain on what's going on in those markets. We have a lot of investors, whether they're in Sydney or in other states and locations that tune in, that like the Sydney market. Myself, I've been looking at that inner west market as potential investment. I think one of the areas that have been hit hardest by COVID in terms of people losing their jobs is the inner west. So we'll have a bit of a chat about that and what might be happening with property prices. And Barangaroo, for our listeners aren't familiar with it, that's that whole new area, sort of mini CBD of Sydney CBD, out on the water there by the old wharf. That must be a ghost town at the moment. Yeah,
it is actually. There's a few people starting to come back, but certainly the big firms, there's Westpac, there's St. George, there's PwC, there's all the big accounting firms down here, financial firms, and they're certainly still not here. So it's definitely... We did have a few tumbleweeds a few months ago. Now there's a few more people around, but yeah, it's definitely dead.
So you mentioned that you got into real estate, you started in real estate, I guess, sort of with the interest in property and property investment. Let's have a chat. Property investment journey. When did you kick off? What was your first property and why did you get into it?
Mate, I bought into our family home and I bought another property with some family. Why? I guess I always sort of thought that it was the way to make money, I guess. You know, I came up let's not get into it, but it's standard story. Came up, growing up without much money. Saw a lot of people make a lot of money out of property, and I thought that's definitely what I want. And took me a long time to sort of realize the strategy and the niche that I wanted to be in. But a lot of learning, a lot of reading, a lot of education, and a lot of mistakes, and slowly, came up to where we are now.
So you just covered a whole bunch of the trials and tribulations of being a property investor. Are you Sydney born and bred, or you're from another state?
I am. I grew up in the Shire, Southern Shire. Yeah, it's a great place to grow up. There are people who've stayed there. There are people who've gotten out and left. Personally, I sort of got out and left, and I really enjoy being closer to the city. But yeah, look, fantastic place to grow up.
And you said you bought into the family home, so no doubt there's a story there. But you said you bought another investment property pretty much with family. Where did you buy that? When did you get it?
We bought in. When did we get it? It would have been 2010-ish.
Okay.
Around then, we bought in Newtown, street back from King Street, one block back from King Street.
Nice.
Was a really good property. I did really well for us. I sold my shares in it in the last few years and sort of moved to a different strategy. But yeah, I think that it was definitely a good move at the time. It was I hear a lot of people saying that they can't get into property, they can't afford to get into property. And I was definitely in the same boat, mate. When I left school, I was a mechanic. I started my apprenticeship on $5.10 an hour. I was doing the calculations the other day. That was about $193 a week before tax, without overtime. And so I guess for me, it was the only option, there was no way I was going to be able to afford a whole property by myself. And so, yeah, that was the only option.
And which family member did you buy it with, a brother or sister or something?
I bought it with an auntie and uncle.
An auntie and uncle. Okay, that's cool. And they've still got that property, have they?
They have, yep.
Yeah.
Yep.
Wow.
They have, still doing really well for them. Yeah.
I imagine it's probably done pretty well, right? Buying in town sort of 10 years ago and into that particular, was it like one of those sort of pretty standard 2-story terrace tower?
Yeah, it was pretty standard.
So you said you sold out your shares in it. And you said you sort of sold out of that investment and looked at other opportunities and other sort of strategies. So where are you at with it now? What sort of stuff are you investing in? Why are you investing in it now?
Mate, I look more into regional areas now. Not to say that I won't come back to investing in the city. I definitely will. Look, what I have seen over the last few years, especially, I feel like, and it's not to say that it's going to continue to be like this, but I feel like over the last few years, we've seen a change in that, that typical, it's a 10-year property cycle idea. And, you'll buy and then 10 years later it'll double in price. There was always the advice that I got from the older generation. And I just, over the last 3 years, we've seen a drop, a spike, and then a drop again in 3 years. I feel like we don't have that 10-year cycle so much anymore. So I look a lot in regional areas because there's a lot less fluctuations in price. If I had to pick one, I would choose cash flow over capital gains. Obviously, both is great, but if I had to choose one, gun to my head, I'd choose cash flow. So we have a bit of a strategy right now where we buy regional properties and we'll either hold them for the cash flow or we will vendor finance them to people who essentially, want to buy them and they just pay us and gives us great cash flow.
Okay, so that's a different sort of strategy. I want to dig down into it. We'll just go to a break beforehand. Back in a moment. Welcome back, everyone. Phil Tarrant here, host of the Smart Property Investment Show with Alex Lumsden, chatting about investing in regional locations and with a cash flow orientated strategy rather than a capital growth strategy. And they reckon the holy grail, Alex, is cash flow and capital growth side by side. It's often hard to get both of them. So you normally get one of them and you're obviously going down the cash flow route. What's the basis of that is, so using asset as in cash and with a bit of debt, no doubt, to buy in a location which generates positive cash flow. So you're ahead of the game. Why have you gone down that particular path?
Mate, I read Steve McKnight's book, as I'm sure a lot of people did, 0 to 130 Properties when I was young, and along with Robert Kiyosaki, they're probably the two most read in property investor books in Australia. I decided a long time ago that I was keen on positive gearing. I'm not knocking negative gearing for some people. Obviously I'm not qualified to give financial advice, but my opinion is that obviously it works for some people, but predominantly if you want to be a real proper investor, not just save on tax, positive gearing is where it is. And I guess coming up in Sydney and especially working in Sydney where I do now, very difficult to find that something possible, but it's very difficult to find that positively geared property in Sydney. And so for us, I guess, in terms of growing a portfolio, every time I go back to the mortgage broker to finance a new property, there's more cash flow, there's more security there on the balance sheet as opposed to less. So for me, it's just a no-brainer.
Mm. And sort of what's the size of your portfolio now? How big would it be, to give me some context?
We've got one building with 18 titles, so whether you want to call that 1 or 18, and then we've got 5, 7 blocks of land that we're financing out as well at the moment.
Okay. So you've got one asset, 18 all in one go. So that's 18 different rents, 18 different bits of income. Yeah. Whereabouts is that? What is it?
It's a building up in Moree that we just bought, actually.
Okay.
Look, it was an interesting one. I was a bit hesitant to buy in Moree. It's probably a little bit more regional than I would usually look at. We're looking at a couple of places down in Wagga, which is probably a bit more our style. But yeah, this one came up and took a punt. We'll see.
So Moree is for our out of New South Wales listeners. That's sort of northwest, isn't it? New South Wales?
Yeah, very northwest. Yeah. I guess closest to Burke, out that way near the Queensland border. That's probably 2 hours, hour and a half from the Queensland border.
It's middle of nowhere, isn't it?
Yeah, it really is.
It's beef up that way, isn't it, by memory?
Yeah, I think you're probably right. Yeah.
Yeah. And you've obviously seen the property. You've gone up there and checked it out and had a look around. You didn't do it all over the internet, did you?
Yep.
All over the internet?
Yeah.
Oh, this is cool. So what is it? 18, is it a block of units? Is it an old hotel or something?
No, it's a block of units. It's, that standard country single level, all in one line, all separate titles, but all in one line.
Okay, all separate titles. So
yeah, that was a draw card for us.
So it's strated then, currently strated, but essentially one owner. I've got a similar property. It's not that many in it, but it's all individually strated and but one, we're always separate titles. So you've got 18 different titles then on this. Does that mean you've got to pay 18 council rates, 18 sets of insurance, 18 water bills, 18 electricity bills? How's it all work?
Yeah, the insurance is all one, but yeah, council rates and everything is separate. The idea of it all being on separate titles is so that we can on-sell it. We can give us a lot more flexibility. We want to sell 5 and keep the rest. We want to sell 10. We can just easily move around here and there and do what we need to do at the time. So
it's pretty cool.
Yeah.
So one owner that you picked it up off, was that the original owner that did the original development, or did they sort of pick it up themselves,
Mate, it's a great question. I got no idea, to be honest with you. I wouldn't imagine so. It was built in the 80s, so I wouldn't imagine so. I would say they bought it.
I'm visualising a blonde brick type.
That's exactly what it is.
Yeah, okay. Yeah, I know what they look like.
Is
it pretty tatty, or is it, is the gardens quite nice, or are they pretty tatty?
No, it's all, it's pretty, look, it's certainly low budget accommodation.
But, it's beauty's in the eye of the beholder. And if it's positive cash flow, I reckon it's a beautiful thing. So let's have a chat about that. How much did you pay for the 18 places?
We paid $880.
$880 for 18 houses or 18 individual units. And what are you renting them out at?
Only 6 of them are rented right now. The average is about $120 a week.
So $120 each a week. So let's call it $500 a month for the sake of simplicity. When it's firing on all cylinders and you've got all 18 properties tenanted, that's putting a nice wedge in your back pocket every single month.
Yeah, it's not bad. I think what we will aim to do is sell sort of half of them and hold half of them.
And what sort of debt did you pick up on it? Sort of 800 or grand. What sort of LVR did you go in at?
We went in at around 60.
All right. So that's cool. So good limit. So what was the next for you then on the investing front after this one? You said you got a couple of blocks. Are you vendor financing them, Is that the idea?
Yeah. We're vendor financing them. Yeah, we're always looking for some more land to do. That's a bit of fun. I'm in it with a partner of mine. And what's next? Yeah, like I said, I'm looking at a couple down in Wagga. I would prefer this. I really like that sort of, I don't know if you'd call it the wheat belt, but that sort of area from sort of Wagga to Canberra up to sort of the edge of the Blue Mountains there. Yeah, I really like the Gold Coast as well. One of my goals for the next project, whether it's the next one or the one after that, is to actually buy a block that's not strated and divide them all up and strata them and sell them individually. I think the Gold Coast is quite good for something like that. Yeah,
it's a good strategy if you get it right, but you got to get the really good bare bones assets that allow you to strata and
get the
higher
risk than what we're doing right now.
It is a bit, but some would argue that vendor financing is potentially, well, it's higher risk than just normal sort of buy and hold type strategy. For our listeners that aren't familiar with that particular strategy, can you articulate it for them?
Yeah, the easiest way to explain it is that we become the bank. So people will pay us a deposit and enter into a loan agreement with us, and then they essentially pay us the repayment instead of paying to the bank. Yeah.
And at a point in time, they'll gain title to the asset. That's the idea?
Yeah, that's right.
So
at some point they can, refinance it, and but essentially, that's the idea.
So you buy the asset with some debt on it, and then you sort of sit in the middle there until, I imagine you must have some pretty tight contracts to help you navigate and steer that.
Yeah, mate. Look, there is a little bit of risk in it. Obviously, there always is with investing. But I think once you have everything, I mean, how many people do you know that just randomly stop paying their mortgage to the bank? Not many. So I think, look, part of it is about, I guess, working with people if they have financial issues. It's very rare, I think, that somebody is just going to, throw their hands up and just randomly stop paying you. But it's about having all your ducks in a row just in case, and moving on from there.
Yeah, well, if you listen to this and go, oh, what is that? There's, smartpropertyinvestment.com. We speak a lot about that particular vendor financing. Just put in the search bar and a whole bunch of articles come up, no doubt around it. Alex, we're going to have another break. We'll be back in a moment. Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Alex Lumsden. Now, Alex is a real estate agent operating out of Barangaroo, but mainly servicing markets in the inner west and also the eastern suburbs. You mentioned, Alex, tell us a little bit about the business. It's quite new. You're working within another agency for a point in time and thought you'd go and do your own thing. Is that the idea?
Yeah, mate, that's exactly what happened. Look, I was a partner and a director in a bigger franchise office. I'd rather not say which one. But look, I just really saw a bit of an opening. I think the real estate for me is a really, really simple equation. The better the marketing, the more people come through the door, and the better the result is at the end. And that great result at the end is really our only job. And there are so many tools around these days to do fantastic real estate marketing that I don't feel are being used. For me, it's all about digital marketing, targeted social media marketing, and just really, really good engaging video. So I thought, mate, I'm going to go out on my own and do my own thing. And I have. I guess I would classify us as a property marketing agency. I mean, the bones of real estate are still there. We deal with people, we open doors and show properties, and we negotiate. But essentially, the biggest difference is that I think we do much better marketing than anybody else out there.
And what sort of property do you sell? Is it new stuff? Is it existing stuff? It doesn't really matter?
Yeah, it doesn't really matter. I try to steer clear of commercial properties. Commercial is very transactional, and I really enjoy the personal relationship of working in residential. But otherwise, mate, we go right in. I predominantly stay with houses for no reason other than I really enjoy the architecture and the houses and working with the families that are in those sorts of areas. But otherwise, we're really we can do whatever we like, I guess. That's why we went out on our own.
And what's sort of going on in the markets that you operate within right now? And let's talk about in a city. So it's probably where you sort of got your first run in property. So is that the whole sort of Newtown area, or is it more like Littlefield or Annandale, sort of Stanmore? Is that sort of belt?
Yeah, sort of the second half there. Yeah, look, what are we seeing? Mate, you touched at the start on a second lockdown. I think everybody right now is very uncertain. And I think uncertainty is not good for the property market. Whether it's going up or down doesn't really matter as much as long as people know where it's going. And right now, there's a lot of prices that are holding steady, even though we've seen sort of clearance rates dip a little bit in the last few weeks. Prices around these areas seem to be holding steady, especially with houses. They seem to be holding their value quite well. There's really, no indicators to say that they should. Every time there's uncertainty like this and economic trouble, it often drops, but we haven't seen that yet. September will be telling, I think. We'll see what happens, how the government handles, the cliff, I guess, that we're coming to and how they ease us into it. I think the management of all that will determine what the market does.
I think this sort of potential to shift back into more exacerbated lockdowns is running concurrent with commentary from the government right now, talking about ways in which they will, inverted commas, continue the job keeper. It'll be very different to what it is right now, but there is more stimulus coming our way, and hopefully that will give businesses greater confidence to proceed doing what they're doing. But, it's hard to operate in an environment where you don't know what tomorrow brings, and whether you're running a cafe or a real estate agency, it gets hard to plan, particularly if you're customer led. Is the jitters coming out of buyers or sellers, or is it both sides of the market is sort of worried? Because I know some really good investors right now are capitalizing on this sort of sentiment of uncertainty to get some, get in the market or at least hunt bargains.
Yeah, mate, look, you're exactly right. I mean, every buyer's agent that I speak to is, run flat out. They're buying. People are buying. There's a lot of uncertainty from a lot of buyers, but like you said, the really educated ones that know what they're doing are jumping in, a lot of them, mitigate your risk, obviously. The most uncertainty I'm seeing from people is from vendors not wanting to put their property on the market right now, just waiting to see what happens unless they really have to, which, is probably not a bad idea. I know that you won't often hear a selling agent say that you should hold your property, but yeah, look, I think that for people who have, a $2 or $3 million asset, if they're really uncertain and they're not comfortable, then you shouldn't move right now,
And so is that an expectation thing where people think their house is worth X and they go to sell it and someone goes, no, it's only worth Y, and they think, well, I'll just sit around and wait till it's worth X again? Is that pretty much what we're seeing? And hence the reason why because there was a whole bunch of stock coming back on market, and it sounds like the brakes have been applied just this last week.
Yeah, look, I think that you're right. I think actually, though, what we're seeing more is people not wanting to go to market at all. That's definitely what I'm seeing. People really wanting to just wait and see. I think that the fears of a drop are not enough for people to put their property on the market straight away. I mean, there is stock on the market and there are people selling. Whether it's the right thing, who knows? Right now, it seems to be. For the last few months, we've seen prices hold steady. I'm curious to see whether it's people who already had pre-approvals and who already had access to money that just really wanted to buy, and whether we're starting to see the end of that now and what will happen. I'm also curious to see if there's a lot of small businesses that are struggling whose owners have put their property up as security. That could also be a big factor as we move forward out of this.
Yeah, it's another complicated challenge that small businesses have when they're using their family home or investment as collateral for securing finance against a business which might not be operating. It just you see, if you're not in small business or you're not an SME business owner, some of the challenges they have trying to balance all that stuff. And you touched on this really quickly around your discussions with buyers agents. A lot of our listeners, they do it alone and they invest without a buyer's agent. There's a whole bunch also who use a buyer's agent, and we often speak to buyer's agents around how they operate with real estate agents to support the buyer of real estate, but we don't normally go the other way very much. Do agents enjoy dealing with buyers agents? Are they more of a hindrance or a nuisance, or they actually help get deals done quicker? What's your thoughts of it all?
Yeah, I love it. I'm always recommending that my clients should go to a buyer's agent. Some people want to, but not many people want to sell their own house. So I don't really understand why people would always try and, want to buy their own house. I mean, I guess for me, the easiest way to explain it, I spoke to a lawyer recently just in conversation, and they said that when they're going up against somebody, it's always better when that person has another lawyer representing them, because they both know the game, they both know what they can and can't do, and it's just easier than trying to deal with somebody that doesn't really know and is trying to sort of sort their own way through. And I guess it's the same for us. It's two professionals doing their job together, as opposed to, one professional and one person that's just the one or two times that they're going to do it in their life,
Well, it's how it works in America, right? You have a buying agent, you have a selling agent, and they share the comms. It's a different model out here where, most buyers agents, you either pay a flat fee or a percentage of the sale price. It's an interesting game because as the selling agent, you're trying to get the best price possible for your vendor under the circumstances of them selling, and that might be speed or distress or whatever it is, right? And then on the other side, you've got the buyer's agent trying to get the cheapest price possible for the asset. Is there always a way? Like, who are the best buyer's agents that you like dealing with? What sort of traits do they have that makes it easier for a deal to get done?
Mate, that's a great question. Look, I guess being really professional, I think that it's not necessarily that one person is going to have an advantage over the other. I think if the selling agent has done their job right, in terms of selling it, it's all about competition. That's why I say you get the best marketing, you get the most people through, and you get the best result, because there's always people waiting in the wings there to push the price up. You can't, whether you're dealing with a buyer's agent or a member of the public, there's gone are the days where you can just, trick someone or convince someone into handing over $2 million. It just doesn't happen anymore. The only way that you can do it, whether it's a professional or not, is by showing to them that this is where the value is. And the best way to do that is by having, multiple offers and competition on a property. So I guess the massive advantage that I see for buyer's agents is that they're essentially dealing with 10, 15, however many clients they have at the same time. When I speak to them and I tell them what properties I've got coming up, I'm speaking to 15 buyers at the same time.
Yeah.
So I really enjoy it. I'm a big advocate for buyer's agents.
That's cool. It's really good to hear. And for those of our listeners who haven't thought about using buyer's agents or how they actually work with real estate agents, that's a really good way to see the other side of the fence. And that is the view of an actual vendor representative, the selling agent, because they're highly incentivized, aren't you, Alex, to get the deal done. And the best deals are normally the quickest deals, right? So if there's an environment to get a deal done and done quickly, you typically find that you have better outcomes and better satisfaction on both sides of the equation.
Yeah, mate, highest possible price in the shortest possible time. That's the easiest way to say it.
How are you sort of going with listings at the moment on your books? You got many there? You're sort of getting out there and doing plenty of presentations, or it's just the market is just dictating the speed at which it works?
Yeah, a little bit of both. We're definitely talking to a lot of people. There's a few that are coming online right now. It's certainly been a lot quieter in terms of stock levels over the last few months. But coming towards spring, a lot of people are saying that spring selling season isn't really happening this year. Mate, I'm always seeing more activity around this time. So a lot of presentations, talking to a lot of people. It's an experience. This is a great time to be alive and a great time to be working in property.
Well, you're still a relatively young bloke, so to kick off your career in your own agency, probably one of the most contested environments that our generation is going to see. It's not a bad way to, pardon the pun, earn your stripes, right?
Yeah, mate, I'm 33. Everybody says that I look really young. That's why I grew the beard, because it's obviously not an advantage to look 21 in our industry. But if it was easy, everybody would be doing it, right? I mean, I've got a theory that it's a great time. There's never been a better time to open a business from a personal level, because everything that we're doing now to be successful builds much stronger foundation than it would if it was sort of, easy times in inverted commas. Yeah.
That's good, mate. Well, thanks for your time, Alex. I enjoyed your investor story and your view of the market and some of the trials and tribulations of operating with buyer's agents. It's always good to hear these stories. So thank you.
Phil, it's been fantastic. Thank you, mate. Cheers.
Nice one. Hope you enjoyed that, everyone. Remember, smartpropertyinvestment.com.au is where you need to go for all the latest information every single day on what's shaping property markets, buying behaviours, the attitudes of economists right across this great nation. Go and check it out. You can subscribe there as well. Just press the subscribe button. But if you're a social media person, that's how you like to get your info. You can track us down. Smart Property HQ is where you need to go. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.